All right, candle range theory trader back with you with another video talking about how to trade candle range theory with daily fair value gaps. So let's not waste time and get right into it. What this video is going to cover is the daily fair value gap zone, the candle range theory, ways to enter trades, the best times to trade, a decision flow or checklist for taking trades, charts to stay away from, and real chart examples of this setup playing out. So this is the daily fair value gap. If you do not know what a fair value gap is, very simply stated, it is a 3 candle pattern that can show tremendous momentum. It is a 1, 2, 3 candle pattern, and the low of candle 1, in this example, and the the low of candle 3 and the high of candle 1. These two candles, this one here and this one here, do not overlap. So it creates a gap in price that we expect a price to eventually retrace to and possibly bounce out of. And I apologize for any background noise. I think there's some guy riding a motorcycle or something. But anyway, there's an indicator that we use to illustrate or show these zones whereby we can take trades here. So if we have a green fair value gap, we're going to be looking for the candle range theory to play out long here. Or in a bearish example, we look for the fair value gap. See, we have the 1, 2, 3 candle pattern, the gap in price, and then price bouncing off of this fair value gap and continuing down. And here we have the 1, 2, 3 candle pattern on the daily chart. This is a daily chart. And price rebalancing here and then continuing up. Just a few more examples here, because the beauty of using the fair value gap is ideally in a trending market, fair value gaps hold and price does not come back down into them. So we see here, this fair value gap never even got touched. This one didn't either. And for this one here, barely got traded into. And for this one here, barely got traded into. So that's the zone that we're looking for and taking trades. Okay, so if the fair value gap is red, obviously we're only looking for the candle range theory going short. And if the fair value gap is green, we're only looking for the candle range theory to play out long. So you don't have to worry about your bias. As soon as you see price in that zone, you already know I need to be going long or short. So now I'm going to show you how to set up this indicator on your chart. It's really the only one that you'll need. So on the daily chart now, let's see, this will be the daily chart here. There we go. And then what you're going to do is come up to indicators, type in fair value gap, or actually FVG. And I just used the one by Nephew Sam, but there are others. I mean, if you want to use another one, that's fine. But this is just the one that'll be used for the sake of this video. It's FVG by Nephew Sam. Just pop it on the chart. You really don't need to make any other adjustments. This is fine, and the gaps will automatically pop up. And then you see here the gap displaying here. And I'll show you one more example here in CAD Yen. The fair value gap displaying right here. So all we're doing is looking for the candle range theory going short in this zone right here. And obviously is that if price is not in the gap, we're not trading, but that's why I watch all the pairs, because daily fair value gaps are infrequent. However, when price does retrace to them, as you see right here, it can provide a good, strong opportunity. So I hope you see the potential in that. So let's get back to our slideshow. And that's all you need to set up the chart. So the candle range theory pattern. If you don't know what candle range theory is, for the sake of this video, it's only going to be a 3 candlestick pattern, whereby we have a candlestick range here. The second candle here pokes below the candle range and closes back inside of it, and then expands to the upside. It can be a multi-candle pattern, but candles 1 and candles 2 are non-negotiable. Meaning that if candle 2 does not poke below the range and close back inside it, then there is no trade. That's how this will give you the best odds of success. Is it possible that a later candle can poke below this range and close inside of it? Yes. But for the sake of this example, we're going to stick with this pattern going 1, 2 like that. Obviously, this is just for longs, but going shorts, you just have to switch this chart upside down. You have a candle range long, price will poke above it, close inside of it, and then you expect to move to the downside. We trade the 4-hour chart, so we want to see this play out on the 4-hour chart. So why do we combine these two ideals? Because the fair value gap can show a strong move, usually driven by banks. These price levels are magnets that price can trade back into, and it's highly probable that the price can continue once it hits the candle range or the fair value gap range, and the candle range theory is the best way to see a reversal or continuation of that daily trend. Now, these are the 3 candles that we use for our definitions. The first one being the range candle that sets the range. The size of it does not matter. The second one being the money candle, that is a non-negotiable. It must follow the range candle. Okay, if there is no money candle, once again, that follows the range, there's no trade there. I need you to stick to that rule. And lastly, this is our trading candle where we enter. So now let's talk about the trading candle, this candle right here. This is where you're going to be trading, or this candle right here, candle number 3. Okay, that's where you're going to be looking for entries. But where should we be entering? So ideally, you want to enter around or below the candle's low if you're going long. And if you're going short, you want to look for price to go to the open price, somewhere above the high, and then go down. That's where you're going to be looking for your entries. This zone up here, if you're short, around or as close to it as possible, or around this area here if you're going long. That's it. You don't want to try to enter in the middle or all the way up here. No, the move's over by that point. You want to be on the bottom portion here if you're long, top portion up here if you're short. All right. So these are the times to trade. 1700 hours, which is the worst time because of the spread and the market reset. 2100 hours, which is A's in session, every 4 hours, 1 a.m., 5 a.m. This is the London session. You could have to put some pretty good odds here. 9 a.m. can be good because you have the London session and New York session overlap, so that can be a good time to trade. 1 p.m., which is strictly New York session. London is closed by then. If you take a trade here, you're probably going to have to hold overnight. But this setup can occur at any time. So you're going to set your own hours, and if you miss the setup, then oh well, doesn't matter. There'll be another one. So this is what you must see. This is the pattern matched to the times. So this could be like a 2100 range candle, a 1 a.m. candle here, and then the 5 a.m. open high low close where you're trying to enter down here in the bottom below the open or around the open price before this price expands to the upside and closes out the range. So all you're looking for is this pattern inside the daily fair value gap. So these are the range candle times, money candle times, and clear times to trade. You can pause the video, copy this down if you'd like, but just know you're moving in 4-hour intervals and you're constantly looking for a range candle, money candle, and a clear time to trade. So you should only be trading in 4-hour intervals. So you know you're not sitting in front of the chart every day. This could be something as simple as just setting an alarm on your phone every 4 hours to see if there is any money candles and range candles, and then you're starting to trade at 1, 5, 9. This is Eastern Standard Time. I'm on the East Coast. 1 p.m. This is the worst time to trade after market reset because of the spread. There'll be a tremendous spread, and you don't want to do that. So if you see a clear time to trade in the 5 o'clock hour, you're going to want to wait at least an hour or two once the spread calms down, and then you can place an order below the 1 p.m. candle's low. And then, of course, 9 p.m. Eastern Standard Time. Now let's take a look real quick at this is a 21 or 9 p.m., 1 o'clock, and at 5 a.m. So London session trading window. So here's our range candle right here. The money candle right here, which pokes below the range, closes inside of it. And then here's our trading window here. And of course, the non-negotiable is this price action is taking place inside the daily fair value gap. All right. So here's the 4-hour candle and the 15-minute chart side by side. Do you need to drop down to a lower time frame? You can if you want. But as you can see, this is the open price of the 5 a.m. candle, and it doesn't give you much time to get in. So you have about 1, 2, 3 candles to get in before boom. Once this big price comes up here, it's pretty much too late because you want to get a tight stop loss. So best entry will be between 5:15 and 6 a.m. Once 6 a.m. hits, price is pretty much off to the races. So this big candle right here is this 15-minute chart right here. Okay, so this big candle here, this is how it looks on the 15-minute chart. See how price spiked all the way down and then kept going up? So if you were to try to get in right here, you probably would have been stopped out. You're trying to set a tight stop loss, okay? So you want to be in as early as possible and just keep an eye on price action. So here's our decision flow for looking for trades. So number one, when you come to a chart at one of these 4-hour intervals, on the 4-hour chart, number one, is price inside or near a fair value gap zone. It doesn't have to be exactly inside of it, but at a bare minimum, you need to see this money candle make contact with it. That's the bare minimum. Okay, this money candle, sometimes it'll poke the very top of the fair value gap. That's fine, something like that. So next is there a range candle followed by a money candle. And then once that takes place on the 4-hour chart, once again, you're going to want to enter around the open of the trading range, and the low or high of the money candle should hold. That's the non-negotiable. Sometimes there'll be a wick that may tap it. That's kind of rare, but it can happen. But as long as it doesn't close below it, you should be fine. So remember, this is a 3 candlestick pattern only. So the range candle size does not matter because sometimes price will break out of it. But the money candle, smaller money candles are always better. If this money candle right here in the middle has a very long wick. That's not ideal because the stop loss can be a little too deep. So we don't like seeing long wicks on money candles. All right. So as far as profit goes, you should be in profit if the trade plays out within 4 to 8 hours. I'm sorry, yeah, 4 to 8 hours because it's 1 to 2 4-hour candles. Okay. So I would not hold any trades more than 12 hours. If you're not in profit in 12 hours, I don't know. But either way, that you're expecting a straight rise or drop. So real quick, these are some charts that I don't trade because you will see this every now and then. You'll see fair value gaps that may overlap. Remember, this is on the daily time frame, so I don't really care to trade that. I'm not trying to figure out what the trend is. You could be looking at some consolidation. I don't even try to figure it out. Avoid those. Price that's not near any daily fair value gaps, you'll just see a whole bunch of white space. Even you may see some good setups that you may have normally traded. If it's not in that zone, I'm not interested. I want high probability only. And as well, sometimes price may be sandwiched between two fairly gap levels and not touch either one. Don't try to guess or see which one may play out because even though this one came close, I need it to be inside this red range before I would consider taking it short. So even though it did play out, I just don't care to take it because sometimes two price could just keep right on going up and eventually close out the daily fair value gap. So these are some good charts that did play out for the week of March 23rd. So let's take a look at some of them. Now, for the sake of this, all I did was mark the highs and lows of the range candle. And I'm going to tell you the trading times. So this one here was on a Tuesday. Here's the range candle here, the money candle that poked below it. And you'll see arrows that point to the trading candle. So right here, you see here, this wick here. Your best interest should be above the open if you're short and price closes out the range like that. Same thing here. We have a range candle here. Money candle that pokes above the range, closes inside of it. So here's our trading window right here. This was also at 1 p.m. So this pair gave us two opportunities because the money candle tapped the fair value gap here and here. Okay, so until price taps into the daily fair value gap level, I'm not looking at it. All right. So, and then for this trading window, obviously price did come back up a little bit more, but then it kept dropping. All right. So again, I say about 4 to 8 hours or 8 hours ideally is when you want to be out of the trade. That's two candles from the trading. So this is the trading window here. So 1, 2, 3, this was done. This was done in two candles, 1, 2. Because if you hold, see how price retraced and came back up, you don't want that to be you. So ideally you want to be out in about 1 to 2 candles. Okay. Next one here. Range candle, money candle taps into the daily fair value gap and closes. This is our trading. This was at 9 a.m. on a Wednesday. And you have another range candle here. Money candle pokes above it, closes inside. Here's our time to trade again at 9 a.m. And so that's on a Wednesday and a Thursday. So this pair gave two opportunities where it tapped into the daily fair value gap level and went down. Okay, but remember, we're not in it too long because you will see retraces. So even though the trend may be short, you're still going to have price come back and then, chop around a little bit. So get your money, get out, and get on about your day. Here's some long examples. This was on Australian yen. So you see here the range candle, which was red. The money candle tapped below it, closed inside of it. We start trading. Obviously, this here did poke down a little bit. This is what I was talking about, where price sometimes may wick the money candle, but it doesn't close below it and then expands to the upside. So sometimes if it's possible, if you can set your stop loss below the daily fair value gap, that may work if it's small enough, but it just depends. So sometimes though, the money candle will get wicked, but don't let that freak you out. Okay, and this is also what I like to call a 4-hour retrace, where after the money candle does appear, you start to trade here, and this can put you in a little bit of drawdown, but at the end of the day, the trend is still long, and all that could have been yours. So that was at 9 p.m. on a Tuesday. Here we got a range candle on Wednesday on CAD Swiss. The range candle's here. It's already in the daily fair value gap zone. Okay, and then just goes down to the downside. This one worked out pretty well. And hey, another fair value gap did appear here. That can be a definite sign that trend is continuing. So that was good. That was at 1300 or 1 p.m. Here's a long example here. We have a tiny range candle inside the daily. But again, all we're looking for is the price action. If price goes below and closes inside, that is a valid range inside the daily fair value gap. And look at this. 1, 2, 3 candles, 4 candles. This was 12 hours. 4, 8, 12 hours. Actually 16 hours. But again, 16 is really pushing it because eventually price will come down. Okay, it doesn't go up forever or down forever. But this was at 5 a.m. on a Monday. This was a London session trade. But starting right here, this was the trading candle right here. So below, remember we talked about being inside the wick, below the open of this candle. And then price trade, it was just straight rise. Okay, here's a good long example here on a Wednesday at 9 p.m. or 2100 hours. Here's our range candle, which is red. Money candle pokes below it inside the daily fair value gap. We start trading right here at 9. 1, 2, 3 candles. The take profit ideally is at the top of the range and you're out. Okay, so that was it. Retraced a little bit and came back. Let's see, we have a one here on Tuesday. Here is the range candle here. It's small. There's the money candle. Had a little bit of a retrace, then eventually boom. Okay, so while you should see immediate profit, as long as the low of the money candle is holding, you're good. And this is another one where it came back a little bit to chop a few more shorts. But as long as this money candle is holding the low of it, you're fine. And all that, it just worked out. Boom, above the range. Okay. Now, some of you may be wondering, well, isn't this kind of sandwiched between two? No, because this is actually inside the gap. I'm not trading though in this white space. If price is in the white space, I'm not trading. Okay. I like to see price inside the gap or the money candle touching the gap. That's what I like to see, like right here. So even though it's between two, price is now entertaining the fair value gap. Okay, at a good time, 9 a.m. This was a USA session trade ultimately. So you have our range candle right here, which is small, but I'm just looking for a poke below, close inside. Here's my trading window, ideally being in below the open. Price advanced to the upside. It did come back a little bit, but at the end of the day, it did still rise. Let's see, another one here on Wednesday, range candle, which is red, into the daily fair value gap. The money candle sweeps it. Price expands to the upside. This one here, you could have entered right on the open because it didn't even pull back any. Sometimes you'll see that too, where you just get on in and price just goes to a straight profit. Let's see, another one here, range candle and money candle tap into the daily fair value gap and expands to the upside. We love to see it, but in about 2 candles, you were out. 8 hours, 1, 2. So that was it. Chopped around a little bit and went up higher. Let's see this one here. We have a range candle here, money candle here. This was at 9 p.m. on Wednesday on Brown Swiss. This is one of those where you pretty much could have got in right at the candle open. So right at 9 o'clock, you could have got in. You pretty much had profit in 4 to 8 hours. Boom, boom, boom. Okay, so pretty easy on that. But remember, it has to be around or inside the daily fair value gap. Same candle range theory. Now, we have one here, which is kind of unique, but it can happen, where we have price trading both ways between 2 days. So on Wednesday, we had a long example. Here's our range candle, money candle, and our trading period. Thursday, a little bit after the 5 p.m. reset. We'll wait till the spread calms down. Even entering here could have been good because this was 1, 2, 3 candles to straight rise. And then Thursday, we have a range candle here, money candle here, and then trading back down into the range there, right here near the daily open. So that was good for 1, 2, 3 hours, and it did go ahead and close out this range. So remember, your take profit ideally is the bottom of the candlestick range, of the range candle. So you're just looking for the range to just close out. So here we have a daily fair value gap. This is key. If you can catch a candle range theory under a fair value gap like this, that could be golden. Range candle here, money candle sweeps below, closes inside, enter, all that. Okay, that's Wednesday at 9 a.m. So if you see a fair value gap that takes place below a daily fair value gap, it's like on the daily chart, this would look like a wick. Okay, because the day closed up. Okay, the day closed, I think, around in this area here, if I'm not mistaken. But either way, that was Wednesday at 9 a.m. That would have been a good trade. But the key was it was still around a fair value gap, which was daily. So that's tantamount to what you're looking for. This one here, a few short examples. This was on New Zealand CAD. So just a range candle, tapped it, trading candles here. That was at 1 p.m. And then another one here, range candle was green, money candle here, that red one. Here's our trading window. Retraced a little bit, but then still came back in 1, 2 candles. You had profit. This range was closed out. This range was closed out. So both of those were successful trades. And then we have a long one, price is inside the gap. So now I'm just looking for the price action that I like to see. So even though you see all these trade plays where they could have played out, and actually I think I may have missed one right here. This is a range, swept below it, that went up. But I'm going to focus on this one. This is a range, swept the range, closed inside of it, expansion to the upside. That's all I'm looking for inside of this gap. This is not one though. So if it doesn't close back inside the range, I'm not taking it because as you see here, price kept dropping. I'm looking for it. Actually, here's another one. See, I'm spotting them even now. This is a range, swept the low, came up. Okay. But that one, No, I'm sorry, not that one because it closed all the way up here. I apologize. It needs to close close enough to the bottom of the range, kind of like this one. I think I missed this one. But range candle here. This is a money candle. The wick's kind of long, but that could be valid as well. And it did close out that range more or less. So this is another good one over here. I just don't know what time that took place, but I really isolated this one. But you may see multiple candle ranges pop out. So every time you see one, I say take it. Just be sure to control your risk. Let's see. So here's another one. Range candle here on Wednesday, 9 p.m. Sweeps below the low, closes back inside this previous candle's range. If you'd have got in right on the open right at 9 o'clock, boom, range closed out in 4 to 8 hours, you would have been done. But again, this is another key reason why I say 4 to 8 hours, because you can see if you thought that price was just going to keep going up, 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 it came all the way back down, you would have been stopped out. So take what you can get in 1 to 2 candles. Okay, sometimes you may be out in one candle, it'll just close out this range. It's a 3 candlestick pattern ideally: 1 range candle, 2 money candle, and 3 the trading candle, and that's it. So if you get your profit in 4 hours, be happy and get on with your day. Another one here, Friday, 9 a.m. Have the range candle here, money candle poked above it, closed inside. And then this one has a long wick, but it didn't take out the money candle, so that's fine. Anywhere in here we could have entered. If price is mainly inside the money candles range, it's cool to trade, and you could have took it down. So that was a Friday at 9 a.m. Another one, Friday, this was the range candle, which was red, but the high of it did get poked inside of the daily fair value gap. So as long as money candles ping the daily fair value gap, even if it's the bottom of it, that could be a good sign. And then obviously move to the downside. Another one here, Thursday. Remember, all this is just 1 week. So while the trades may be fewer, you're going to get one a day, 1 to 2 every single day. Okay, so this is Thursday. Obviously, I think you're getting the point. Range candle here, money candle poked above it, move to the downside. So as far as trading times go, this was a rough tally of how many times they appeared each week. So obviously, we saw the majority of activity taking place just for this week at 9 a.m., which was the London session, New York session overlap, 1 p.m., which was late U.S. session, and actually 9 p.m., which was Asian session. So, that will happen. So in conclusion, only trade when price is near the daily fair value gap level. It'll help you filter out wasting your time. Stick to the trading times. You're only checking the chart in 4-hour intervals. If there's no money candle, there's no trade. So really, you're just looking for money candles and ranges. Okay. Aim for 1 to 2 in terms of risk to reward, and you can also scale in to multiply your profits. You could take 1 to 2 trades a week, just focusing on like 5 a.m. money candles, or 9 p.m. money candles. You can really do that and hone that skill and just take it to the moon if you'd like to. Now, the size of the range candle does not matter. Sometimes a small range candle can be good because smaller candles can lead to bigger candles. But as long as the low or high is swept on the 4-hour chart and closed back inside that range, and it's inside the daily fair value gap, you take it without fear. It can work. Okay, the odds are in your favor in this case. But always manage your risk, because one bad trade can easily wipe out days of profits. And be sure to make regular withdrawals. Okay, but again, as I've stated, this method is very easy, very simple. This is one of the simplest entry models I think I've built. I built a few on this channel. The goal here for you is just experiment with them and try them and see how you like them. You may wonder what these indicators are. This is the Mark Levels indicator, but for this chart example, you really don't need it. So even still, you just have to train your eyes to see it. So on this example here, I'll just show you very quickly how easy it is to see just on a chart using just the fair value gap indicator. Oh, and I'm so sorry. There's one thing I did not mention. Daily fair value gap. I apologize. I left this out. This is what you'll need to do. So I'm glad you watched to the end, because you need to see this. The settings of the daily fair value gap model are as follows. When you set up let me just start fresh. I'm going to remove all the indicators. Aren't you glad you stayed to the end? When you go to indicators and type in FVG and put that on, you're going to go to settings, and for time frame, you're going to put it to daily. Okay, that way when you drop down to the 4-hour chart, it'll still show you the daily fair value gaps. I left out that key detail. That's very important though. So I'm glad you stayed to the end. Okay, if you don't change this setting, it's not going to show up. Okay, because remember, these are daily fair value gaps, not 4 hour fair value gaps. You need to have the daily fair value gap and save it. Okay, so be sure to change that setting for daily fair value gaps, because if you don't have it, it won't show up. So once again, just one more time so we're clear. Let's start fresh. Let's remove the indicators. Indicators, FVG, nephew Sam, pop that on, settings, and we're going to change this to the daily. All you want to see are daily fair value gaps, and that's what will appear. So then when you go to the daily, obviously it's just going to show you the same thing right here. And let's just verify this with a quick box. So see how this is a daily fair value gap right there? So then when I drop down to the 4 hour, still there. All right. This is the only fair value gap I'm interested in. I don't want to see 15-minute fair value gaps, 1 minute fair value gaps. I'm only interested in this type of setup right here. Even if I drop down to the 15-minute chart, that fair value gap is still there. Okay, so that has to be done. So I appreciate you watching to the end. Do apologize for leaving that out earlier, but that is a setting that you do need to change. I appreciate your time and attention, and I hope you have a great rest of your day.